The main driver of all of this is liquidity. Liquidity drives all financial markets. Liquidity, for the definition here, would be the kind of ease of which money flows around the system. And I can use money supply growth, M2 growth globally. And obviously with the central banks all jacking up rates and shrinking their balance sheets, what they're actually saying to you is, we want to take liquidity out so you guys can't do as much speculation. Now, what that means is things like your credit card rate goes up, your mortgage rate goes up, you've got less money to spend on stuff. So liquidity, your liquidity, has been taken out of your pocket. And it's the same for everybody, particularly because there's so much debt in the system. However, our job is not to live in the present. Our job is to live in the future. And we need to understand where the future lies. So Stan Druckenmiller importantly said that the job in macro is to see 12 to 18 months out, because the asset markets tend to price the future. So right now we can hear people all on Twitter saying, we're going into a recession. It's clear there's going to be another leg down in equities because they need to price in the recession. That's assuming that everything operates in real time, but it doesn't. So when I look at the year-on-year rate of change of, let's say, the NASDAQ, and compare it to the ISM index, which is my guide to the business cycle, the Institute of Supply Managers survey, it suggests that the ISM survey, the NASDAQ is pricing in ISM at around 40. ISM at 40 is relatively deep recession. ISM at 47 is usually a recession level, and 40 is something, to the order of magnitude of kind of negative 2% GDP growth. Are close. Oil, less so, but coming down over time in line with the business cycle. The exponential age stock, so the long end of technology, the ARC style investments, they priced an even deeper recession. So they got down to about 35 in the ISM, which was very, very low. In 12 months' time, we will have seen a recession and we will likely be coming out of it. Whether we're fully out of it or not, doesn't matter. A recession at some point in the future means that the Federal Reserve will stop hiking and will stop shrinking the balance sheet. And they will probably go towards cutting. In the future, in 12 months' time, the probability of inflation being, at 8% is extremely low because of the year-on-year computational differences and the fact that oil, copper, freight rates, everything has come down massively. So I'm thinking that there is a probability that inflation goes negative within 18 months. So if we look out 12 months, the recession is behind us, rates are lower, and inflation is low. Okay, so that is a very good outcome for risk assets and crypto. Bitcoin had a retest only 2 days ago, and I think it was the retest. So my DMARC indicators, which I use mainly for my technical analysis, gave me that signal. ETH had a much stronger signal in June, and I started finding as much money as I could under the sofa anywhere to start investing, adding to my position. What I do know is that post-merge, a few things happen. There are no miners to sell every day. That's about 6 billion that just disappears from selling each month. Okay, so that's a difference. Then we've got the reduction in supply, but that's really driven by the increase in network activity. So we need to kind of see the network go up a lot for that to really kick in, it become deflationary, but it's less inflationary. So there's less ETH around, but then we've got this magic. The magic is you've just introduced yield into the ETH ecosystem in a secure way. So therefore, because it's a protocol level, so therefore this is going to attract new people into the ecosystem who want to get ETH for yield. So you've got a demand shock. People who are frustrated, who wanted to invest but couldn't because of ESG and Bitcoin. The ETH merge, they're waiting for it to happen. ETH now has a yield. A lot of institutions don't own gold because it doesn't have a yield. So you've got this technology asset that represents a big, exciting future with a yield, with a limited supply. So that has a macro that's changing. That to me suggests the next 12 months, probably very, very good. for digital assets. In a new world where ETH is this very important asset, it's still going to have problems. It's still going to be expensive, and it's still going to be slow. ETH lead the charge, and then we'll see this tail of stuff starting to come as we start a new bull market. And generally things work that way. So I think a lot of these layer ones this time around will be like ETH in the last cycle, 13, been of the opinion that this was a parallel financial system that's being built. In the last 18 months, I've realized that it's bigger than just a financial system. It's in fact the entire system of value, transfer, storage, and ownership in the new digital world. It is probably one of the biggest things I've ever heard of or seen, and it is an incredibly exciting moment in time to be part of it. And it's like learning about the discovery of oil when the Rockefellers and all of these guys started figuring out that the oil was going to make the world go round. Had you been an investor and a participant and understood what it could do and what businesses you could build across the network of oil or the mobile phone or the internet, the fortunes that were made, the changes that happened were so staggering. And this is happening faster. And at the very center of it is a system of money and value, which means that in itself, it is going to accrue value faster than anything else. If Solana continues in the way that it is, even acknowledging the fact that the chain has been breaking, and they know that too, therefore, if your future discounted, you'll expect that will happen less because they will address it. And therefore, over time, Solana probably does okay. That'll be my bet.
Talk about what a time that we stay in a depression/recession for 3 to 4 years. Won't that keep BTC and Ethereum significantly depressed in value? From Dr. Nikhil.
Okay. And I'm not going to be rude here, but this is first order thinking. First order thinking is recession bad. The actual thinking is, if there were to be a recession for 3 years, what are the central banks doing? Right? Because that's unemployment rising for 3 years and inflation falling for 3 years. What would the central banks be doing? They would be trying to stimulate as much as possible, because we have not had a 4-year recession in, well, as long as, I think, not even the 30s. I don't think it was that long. So, but let's assume it's the 1930s again. That is incredibly positive crypto, because there's a massive debasement of currency having to happen to try and protect the world falling apart because of the debt burden. So, again, it's not about are we in recession? It is what is the outcome as growth slows? What happens to liquidity on a forward-looking basis?
Best crypto business to start for a 25-year-old. This really is an interesting question, because lots of young people are watching this trying to understand how they can become involved.
Think about where adoption is going to come from. Think about the next billion people. And, I think it's around culture that I've talked about. It's about social tokens. It's around other uses of NFTs that isn't the same old stuff that's going around and around and around and around with PFPs. I think it's around ticketing, contracts, high volume contracts. Is Web3 talent is in such short supply that you get the double benefit. Firstly, you get overpaid, like the derivative people were back in the 90s. You get overpaid because there's massive competition for your skill set. And secondly, you get to participate in an ecosystem that's growing massively too. So any investments you make probably go up as well. So that kind of double whammy of being a Web3 developer and being involved in a great ecosystem is, you don't get these often in your lifetime.
What is your view on the future of crypto gaming and the metaverse?
Yes. What else do you want to know? I mean, what the question, he knows the answer, I know the answer, Yatsui knows the answer, we all know the answer is yes. The metaverse gaming will be run on blockchain rails. So it's coming. And, Yat is just investing billions of dollars in this space. So, yes. Now, I'm not a gamer, so I don't know who's having the breakthrough. Speak to Pierce Kick, speak to Yatsui. It's all coming. Everybody is super bearish about everything. The game is to look forwards and not look at today. Not extrapolate the worst, but extrapolate the most likely outcomes. The most likely outcome is not nuclear war, people dying of hunger in the streets of Europe. The most likely outcome is a solution. Most likely outcome is an increase in liquidity. A most likely outcome is a recession followed by a recovery. If you're armed with some sort of probabilistic framework and time work of that, these look like good times to be accumulating digital assets for the long haul, because it's a weird old world where you get used to, once you've been in the space for a while, kind of an 80% pullback is normal bear market, like a 20% pullback is a bear market in equities. It's 80% in crypto. The upside average is like 20x. So the risk rewards are huge. Even if I'm wrong and it goes down 50% from here, Bitcoin goes down 50% here down to 10,000, but the upside is 20x. Well, that's still a ridiculous 40x risk reward. Why would you not take that bet?